If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you. All right. How's it going?
It's going well. Had a good week. Yeah. Just going along in Nashville.
I was traveling a little bit this week. Crazy travel day this morning.
You almost didn't make it in for the show.
No, dude. I booked a 6:45 flight out of Maryland to avoid all of that.
Right.
And we're sitting in the, this little, it's like the smallest, it was one of these like 2-gate airports.
Oh, not Baltimore.
No, not BWI.
Okay.
No.
Okay.
So like only like the American Eagle planes.
Okay. Yeah.
And, we're sitting there and the crew's there and like, I'm looking, I realize they're not like, there's no plane out there. And they just keep talking about how it's in maintenance, it'll be over. And they just said, okay, it's rolling over now. 15 minutes later, still hadn't rolled over. I had like one of those super tight connections in Philly.
Yeah.
And so blew past that for sure. And then they rebooked me for like a 3:30 flight, which would have just screwed the whole day.
Yeah.
But I got on standby on 11 a.m. So I was able to get back and.
Yeah, but the stress of it, like you're having to like run around and go on standby. I don't like to.
I don't like it either. But I was kind of resigned to the fact that I probably might not get home until tonight. So when I got standby, I was so happy. Right. I was like, wow, this is amazing. But yeah, other than that, same. Just trying to track all this news and adjust as the entire industry is what our perspective is on things. Big news out of DC this week. So we'll dig into that for sure. Anything else? I mean, we don't have we're not going to talk about the whole Trump Powell thing.
Yeah, we don't have a particular story just because it seems like there wasn't one story, just like a constant. I don't know. Trump is. I don't know. I mean, he's trying to figure out something to do with him, but I don't know that anything's going to happen.
I mean, dude, the clip of him talking about how he's a terrible Fed chair and he was surprised that he got nominated by the Biden administration.
Yeah,
Biden did it. It's just like
Trump appointed him. I mean, like, how can he say he was surprised? I don't.
I mean, it was such a setup for all the memes. All the memes all over social that sort of launched all week, just showing one video of him saying that and the very next video of him saying, I'm very pleased to announce Jerome Powell. It's just like,
yes.
I mean, and people are being very generous, kind of saying it was a slip up on age. I just think he'll say anything.
Yeah. I don't think he worries about the truth or not truth. He just says whatever is convenient to say.
Totally.
Which is a little bit sad to say about our president, but I think is unfortunately true.
But it is kind of crazy to like literally blame the appointment of the Fed chair on the last president when you appointed him.
Right. Yes, that's right. That is crazy. That's
that's a little over the top crazy.
Most people would, maybe you could say I'd changed my mind and I'm disappointed in him, but blaming Biden, I mean, Biden did a lot of things that weren't great, but that wasn't one of them.
Right. So, yeah. And we will spend no time talking about the Epstein files. That's not, this is not that kind of podcast. All right. With that, let's dig in. So talking about Powell, the inflation number ticked up to 2.7. Tariffs have started to seep into the prices, Wall Street Journal. Economists are split on how much tariffs will affect prices in the coming months as tariff policy remains uncertain. So the overall is 2.7 and the core is 2.9, dancing around 3. So, where do we get down to? About 2.3 was maybe the low point that we got down to. And now we're finally starting to see some creep back in the inflation number. And I mean, this is just going to justify Powell's wait and see position, right?
Yeah, I think that's right. I remain more concerned about job loss than prices getting out of hand, but I don't have the data the Fed has, and I think this is certainly going to. I mean, I think that no one thinks they're going to cut in the next meeting, which is in a few weeks. I think maybe the odds are for 2 cuts this year, but I don't know. Yes, it's going to be, I think, probably bumpy inflation,
Right.
up a little, down, flat, but I don't think it's going to run away over 3.5, 4. So I'm not that worried about inflation, but other people are.
Well, let's go to this next story about Starbucks, because I want to make sure that we have a decent conversation about jobs. So,
Yeah.
Starbucks is the latest large corporation to basically force the white collar workforce back into the office. They're telling them they have to, do a 4-day minimum in the office. Some people are going to have to relocate to Seattle or Toronto within the next year. They didn't originate this playbook.
Right.
Maybe a little off brand for Starbucks, in terms of what we might expect them to do.
Mm-hmm.
But I mean, I think it's come to be accepted practice that when large corporations do this right now, it's a very sort of maybe politically correct way to execute a layoff, right? Where you're sort of forcing people to make very, very hard decisions, knowing some percentage of them are going to take the buyout, right?
Yeah. Yeah, I think that's right. They have a new CEO. It's a turnaround situation.
Yeah.
He was brought in to turn it around. And I actually think it's kind of a good way to have the employees self-select. I mean, when we were growing up, if you wanted to go work at Starbucks, they're headquartered in Seattle.
Sure. You move there.
You got to move there.
Sure.
I mean, that's just how work life was.
Sure.
In the pandemic, that sort of changed, but I think we're heading back towards that in large part. So, and I don't think it's bad. If you don't like your job enough to move, then maybe you're the one that should get laid off, and someone else who's super passionate, will move and come into the office every day.
So I want to go back to your point about being more worried about jobs than inflation.
Yeah.
These cuts, especially white collar worker cuts, don't necessarily feel based on economic performance as much as they are companies realizing that they can do more with less of these types of employees. And so I'm wondering where you think the Fed changing their position on interest rates would, I mean, I know traditionally it would spur more economic activity and that would result in more job creation and more job offers. But it does seem like we're in an interesting window now where some of the top performing companies, they're worth more than $3 trillion. They're beating all the estimates. Now, it's not Starbucks, but
yeah.
And they're choosing to, decrease their workforce, right? So I'm just kind of
So I guess the way I think about it is that with the pace of technology improving and allowing the same number of people to do more work, to me that's clear that's already here, and every quarter it's going to be more.
Independent of financial performance.
Yes, one person can do more than they could do last year.
Right.
Next year they'll be able to do more than that.
Right.
Especially in white collar work.
Yes.
And so the way I think about it is that if you don't want to grow, you need fewer people every year. And so the Fed lowering rates, I think, would spur capital investment. The theory is it would spur capital investment and the growth into either new geography markets or new business lines. So you could then at least keep the people you have and repurpose them, or, ideally you would need more people and have to hire. So I feel like there's going to be many companies that can grow at 2%, 3% a year and still cut employees because their productivity is each employee's productivity is growing quickly. Now, that's good for the shareholders.
Right.
And it's good for the overall economy if we spur capital investment and growth. Productivity is the best part of a free market economy because it helps everyone. You sort of push the gains all around, but you have to have enough capital investment and enough growth to take advantage of it.
Sure. I think there's definitely a strong element of truth to what you're saying. I think the thing I'm wondering is whether or not we have lived with this 5% rate for long enough that we've sort of infused a different culture in leadership now, that I'm not sure how much it rebounds once the rates drop. This is like a gut feeling and a hunch. It's not like, you know what I mean? This is not economic theory or based on anything like that. But I just even think about myself, like, okay, if the rates drop and there is more capital that comes in, how does that change how I would think about staffing even our small company? You know what I mean?
Yeah.
And I'm not, it's unclear, right? Because like, I think I've endured so much pain through this process. And I think this is true for all these CEOs, right? We've all endured so much pain that I think for a little while, we're going to be a little gun shy of like taking the candy, you know, when the rates drop. Maybe this opens up, you know, capital from the big institutions and they shift away from fixed income, you know, maybe, but I think you'd have to really move the rates down fairly significantly for that. Like, I don't know that, you know, 100 basis points get you there. You know, I think you're going to have to get probably sub 3 again before the floodgates really kind of open up.
Yeah. So I agree completely that people get anchored in their current state and are slow to change. I agree with that completely. I guess my point is that we want to encourage investment in new things.
Sure.
And that should lead to the creation of new jobs. And then the other side of this productivity gain is I think prices are going to come down.
Yeah.
I mean,
eventually.
Yeah, I mean, you can do more with fewer people.
Yes, but it's not gonna offset as quickly as the tariffs ramp things up, right? The tariffs are kind of an immediate shock to the system. They go into effect. You know, we're already starting to see the impacts of them, and they're not even like fully rolled out. You know, we're like in a dance right now. I think it will take quite a while. So I mean, look, I'm not trying to argue against myself here. I want some rate cuts too. I guess I just am.
Yeah, we'll see. I don't think
worried about how impactful they'll really even be at this point. Like it just feels like we've moved pretty fully into this new era. I don't think we're ever going back to ZERP, right? I just don't think we're getting back there.
See, I disagree with that. I think that it's going to be difficult to pass the costs on with the tariffs because people aren't going to buy the products. The economy is not so strong that if you increase the price of things by 30%, I think it will affect volume.
Sure. Yeah.
So I think, and then technology, starting with AI, but across the board, SaaS and all the technology is very deflationary. It makes things less expensive.
Yeah, I know, but also earning is impaired. Cost of living is going up. Credit card balances are up, and credit ratings pretty much across the board are down. So, you know, I don't know that freeing up more credit is like the play. In that, like that's, we're not in a healthy place to unleash more credit.
Well, that's fiscal, that's fiscal dominance. I mean, like, so
right? Yes,
that is because we have mismanaged our government for a long time,
right? But it's where we are.
The Fed only has 2 levers to pull.
I understand that, but I think that as economists, they are considering all these things, and you know, they're probably realizing they really need to use the rate cut when it's undeniable that it should be used. Like I think the complexity of the situation has just expanded beyond when we first started talking about this things were not this complex. We didn't have tariffs at all. Yeah. We didn't have sort of the threats to globalization that we currently have in place. AI was not nearly as far along as it is, right? So there's a lot. There was a lot of things that were different, even like 1 year ago.
Yeah,
even 1 year ago.
I agree, but I would say a lot of the complexity that you're pointing to, which I agree with, people are stressed. They have significant credit card debt.
Yeah.
Corporations have a lot of debt.
Yeah.
The cost of everything is going up.
Yes.
And people's salary or hourly wages and the number of hours they get to work is not keeping pace.
No.
Those are all signals of a struggling economy.
Yes.
That I think needs to be stimulated.
Yeah. I get your point. I get your point.
But I think you're right that the Fed's tools are not as effective as they were a long time ago.
Even a year ago.
Yes.
I think even a year ago they were more.
Yes.
They were more effective. Okay. Thanks for talking through that with me. America is moving back into rare earth. MP Materials is a company that is leveraging the momentum from Pentagon investments in a deal with Apple. They are mining in California. They are refining in Texas. And it's progress, but it's a long, long road to really make a dent in the dominance that China has in this space, and their positions sort of, across continents where rare earth is probably a little bit more plentiful, and also environmental protections are a little less plentiful, right?
Yeah, I think that's right. I mean, I think it's a great thing that we are starting to build a capacity in this. I agree it's not going to be enough, but having one refining center and one mine is better than none.
Right.
I think it allows us to have a beginnings of a group of people that know how to do this and capabilities, so that if we get into an escalation with China, we've already started.
Right. Yeah. I mean, I'm glad you pulled this story up. We hear so much about data centers, and we hear a lot about manufacturing, but this is the blood of the technological era, right? It's the rare earth metals, right?
Yeah. And it's dirty and really high temperatures and hard, dangerous.
Yes.
These are the reasons we have outsourced it to places like China.
Right.
And I think it makes it difficult to do in the United States, but I think also worth doing at least at some scale, small scale.
So there's a little chart here on this Wall Street Journal story. China's share in the global rare earth supply chain. In mining, they have 60% dominance. In refining, they have 91% dominance. And in magnet making, they have 94% dominance.
Yeah.
I mean, that is just crazy control.
Yeah. Yes.
So, like it's such a fundamental layer of the value chain.
And it's our fault for not maintaining, at least what we are building now. Like, you need at least a few people that know how to do this in the U.S. so that we have American citizens that know it.
Yeah, I mean, so we have obviously a long way to go, but this is it's a good story to mark the progress, but also look at the scoreboard, right?
Yeah.
and see just how far behind we are, right? All right, moving into VC. M7 Health nabs $10 million to modernize nurse staffing and scheduling. Seems like last week we were talking about Simpler acquiring AMN's healthcare.
Exactly. Scheduling system.
Business. Yeah.
This is a big problem. So I think it's great to see an independent company get funded to compete with that. And hopefully there'll be 2 or 3 more. But the scheduling process for nurses is terrible. I mean, it was cutting edge in like 1979. They're still using spreadsheets and a lot of times by paper. And so this is a better way. One of the founders is a nurse. So she brings experience and knows how to sort of bring it out.
Yeah. I mean, their positioning is that the businesses, by nurses, for nurses, has nurse DNA in its core. 25% of the employees are nurses. That does make an absolute difference. No question about it. I mean, gosh, I just had dinner with my care managers for my parents, and they're both nurses. And I mean, just, both like amazing people, but also super knowledgeable, right? You know what I mean? Like in depth in the weeds about how healthcare actually works.
Right.
And
that matters to how you design the software and the workflow
completely.
And everything.
All the little nuances and the context that you need to understand to make these software systems functioning in this very dysfunctional industry, right? You know what I mean? Having that experience base in your employees is fantastic.
Yeah, you need particular certifications on the floor at the same time, and you can't have deficiency there. So the scheduling is more complex than you would think from the outside, but I think it is solvable with software. So
$10 million Series A led by Threshold Ventures and other investors are notable. First round capital and 25M Health.
Yeah.
So good group. Okay, moving on. OpenEvidence raises $210 million, unveils AI agents built for advanced medical research. This is Fierce Healthcare. OpenEvidence is kind of the big LLM with evidence-based knowledge that supports clinicians, and $210 million is a pretty sizable investment round for health AI. You know, we see a lot of big rounds, but 210 that's up there.
Yeah.
For a Series B round. Google Ventures and Kleiner Perkins co-led the Series B, so that's about as blue chip as you're going to get. Sequoia Capital led the Series A, so clearly they've got all the big Silicon Valley backers in the deal, and experienced CEO who has previously sold a company for $700 million. So it's a strong play in the LLM evidence support for physician market. They're not the only player in the space, but they are apparently a very, very fast growing one.
Yeah, I think that's right. And they are growing very quickly. I think it's like 60,000 clinicians every month sign up for it, something like that.
Yeah.
I can't test it, so I don't really have first-hand experience. You have to be a doctor to qualify. But doctors report that it's very strong and really good. The question is, do we need a dedicated LLM for medicine? I think, or will the other frontier models just sort of encapsulate that in everything they do?
Right.
I don't know the answer to that, but that's the big question. They're not going after the low-hanging fruit of sort of all of the back office and processing, even scheduling sides of healthcare. They're right in the kind of, differential diagnosis of complicated disease, which isn't that common, but when you need it, you need it to be exactly right.
Right.
So,
yeah, I mean, history says that software in the clinical setting has almost always had to be specific to the healthcare industry.
Right.
On the enterprise side, not so much. Microsoft and Oracle have making a case for just deploying their standard enterprise SaaS in those settings. But in the clinical setting, almost always you have to be a healthcare specific software company.
Yeah.
So that's kind of the, that's the thing. And chief medical officers are often critical to the buying of these types of solutions.
Yes.
Right. And so even more reason why an OpenEvidence has a good shot at beating out one of the more standard industry agnostic LLM players.
And I think there's a reason they are not allowing non-MDs in.
Yeah.
Right? They're sort of building this tool for docs.
Yes.
And there's like a walled garden aspect to it.
Yep. Fellow Health, $24 million Series B raised for expanding male reproductive test offerings. So this is basically for an at-home semen analysis that you can mail in and then get all your, feedback on where you stand from a reproductive health perspective. 24 million says they must have some good traction. 5AM Ventures and Forest Road Company. 5AM I know, Forest Road I don't know. But that's it's pretty good capital in.
It's a good market niche, I think. I think it's a hassle to go into the doctor and go through the whole look at the magazines and make a deposit there as opposed to doing it at home.
Yeah.
So, I don't know. I think it's probably good.
All right. Here we go. Policy time.
Policy.
Yes. We have a lot to talk about on the policy side. Big news out of CMS this week. Calendar year 2026 hospital outpatient prospective payment system and ambulatory surgical center proposed rule. And basically the long-awaited, much speculated site neutral payment rule is here.
Yes.
So and it's crazy how they did not mince words at all. You know, the semi headlines throughout this press release. Expanding the method to control unnecessary increases in the volume of outpatient services. Okay. Updates to ops and ASC payment rates. Okay. Boom. Eliminating the inpatient only list.
Right.
Like eliminating it.
Yeah. I mean, people have been speculating since Trump got elected. Would he return to this? In what way? How would he approach it? And you're right. It's very straightforward. They're going to eliminate it over a 3-year period.
So that's huge. Beginning with removing 285 mostly musculoskeletal procedures for calendar year 2026. They're getting after it. 3 years, we will not have an inpatient only list.
Yeah,
that's enough time to get it done on their watch. You know,
that's right.
It's hard to turn it around once it's done.
Right. Once it's out of the barn. I mean, it's whoever the next head of the CMS, next president is. You already will have that going on.
Yeah. Complement to that, ASC covered procedures list basically expands. So, eliminate the inpatient only list, expand the ASC covered list. And then a little bit further down, there were some interesting things that we noted as VCs. So there's a section here on software as a service. They aren't being prescriptive yet. They're soliciting comments, but they're pretty clear that they want to analyze the upside of physician offices and outpatient settings, leveraging SaaS technologies, recognizing a lot of times, maybe they're not as robust as hospitals are in inpatient settings with their use of SaaS technology.
Right.
And they recognize that we're going to move a lot of the volume out of the inpatient setting into the outpatient setting. They need to be robust in their leveraging of technology.
Right.
And so they're kind of talking about different payment policies, right, that might be put in place to support leveraging SaaS technology in those outpatient and physician office settings. That's a great signal for us, right? Because as a VC, I think we are looking at all of the different challenges that hospitals are facing, right? The week of July 4th, we learned that hospitals are going to be facing huge issues on reimbursement. Now we're seeing they're going to be facing huge issues on, the captive audience they had with their inpatient only list.
Yeah. I mean, if physicians get to choose, what will happen is physician will get to choose due to medical necessity, the patient's needs, and what's best for the physician and the patient, where they want to do a surgical procedure. And I think not for everything, but for many things, they'll choose somewhere outside.
Yeah. Cost and quality will be, yes.
Right.
So expanding the incentives, meaning payment policies, for outpatient settings and physician office settings to use SaaS kind of offsets the loss of market that we are getting in the hospital space, because the hospitals are going to be so, just flailing around, having to deal with all these different challenges at one time. They're not going to be a very easy audience to sell into.
For our portfolio companies.
Yes, it's going to be very, very difficult for us to sell into.
Yeah.
That's just the bottom line.
I think that's right. I think it's also, it's just true that we have subsidized the electronic medical records in the inpatient setting since 2008 or whatever. So I think it's time to look at that.
Yeah. Other things in there, we'll put the link in the show notes, but I mean, huge news that they are announcing the 3-year wind down of the inpatient only list. Huge. Okay. Next, for Fierce Healthcare, Trump 2.0 backs digital health and proposed calendar year 2026 physician fee schedule rule. So this is, more good news for us, more good news for us innovators. And I said it before we hit record, but I will say it for the listeners, like, reading this article in particular, I struggle with what stopped the Democrats from doing this very thing. So let's just kind of go through the list of things here.
They put out a request for information on what should CMS be doing for the prevention and management of chronic disease, and they really are signaling that they're looking for kind of digital software ideas,
Right.
Which is related to the software as a service, but
Right.
more on the chronic disease management. And they don't promise to react to anything, but calling for information, I think, is good. There's no way that's going to not be good, that they can get some information.
Yeah. That's right. That's right. Next up, telehealth. So seems like they got some stuff done that we've been waiting to get done in telehealth for a while.
Yeah, they made a couple things permanent,
Right.
and they've sort of made it easier, less kind of regulatory barriers. We had to getting things approved. So yeah, it's sort of normalizing and making permanent a lot of the telehealth parts that were put in place in the pandemic time.
Permanently removing frequency limitations on certain subsequent nursing home and inpatient hospital telehealth visits. So that's obviously great. And continuing to cover telehealth services for FQHCs and rural health clinics under the existing payment policy. That's great. It just seems like,
I mean, I think you're right. It makes sense. Everyone will be happy with it. I mean,
sure. Of course.
There's no reason not to do that.
Of course. So this is a big one you pointed out. Medicare Diabetes Prevention Program is now able to be done over telehealth and doesn't have to be done in person. That's a pretty big deal.
Yeah. So DPP, Diabetes Prevention Program, one, it actually has been shown, I think, in a lot of studies to help pre-diabetic patients forestall or even not get into full-on diabetes. And it's reimbursed, but only if you meet with them in person. And we don't have enough clinicians. We don't have enough capacity. So shifting it to virtual in today's day and age, when we're all on Zoom and people are listening to this audio or video, everyone is used to virtual. So I think it'll be very effective and it'll get to more people.
New codes for remote patient monitoring.
Yeah, also incredibly positive. I mean, remote patient monitoring codes have been a challenge to get 15 days out of 30 out of every month. You have to get 15 days of measurements, so blood pressure or weight or whatever one of the measurements. And you would think that would be easy, but getting half the days, there's a lot of times when, I mean, we invested in several that you might get 13 days, you might get 12 days, and it was all or nothing. You just didn't get paid for that patient that month. And so they've made a second tier now, which is lower reimbursement, but between 2 and 15 days. So if you don't hit that threshold, but you get some, you get paid for that, which I think makes a lot of sense. There's no reason to have it all or nothing.
Yeah. So, this is a great one because we kind of started this show with some deep coverage of digital therapeutics, and CMS is expressing support for digital therapeutics, digital mental health technologies, generally speaking, proposing to expand payments for ADHD. So that's obviously positive, just showing a desire to, support digital therapeutics in the mental health space. I think that's where a lot of the digital therapeutics are today.
That's right. Yeah.
And so that's another great thing.
Yeah. And then they specifically call out that it's been not great uptake because maybe it's not fitting with the direct to consumer model. So again, they're looking for information about how to make this more friendly to how people get care.
Right. Yeah. So, hard to find a lot of fault in those,
Yeah. I mean, it seems like they're increasing reimbursement broadly.
Yeah.
And making it kind of easier for people to get care where they are.
Yeah. Here's another really positive policy story coming out of CMS. They officially named participants in their cell and gene therapy access model. And so they have selected 35 participants across 33 states, and as well as, like DC and Puerto Rico.
Yeah.
And basically they're running, this pilot on this model to kind of assess the health economics of it, right? Because these models they're not long-term. They're super expensive on the front end,
right?
But in many cases, they cure the person,
right?
And then that's it. So, they're going to focus on sickle cell, I think, initially.
Yeah.
And see if they can make a case for making this the widespread model of care.
And
I mean,
this is what
hallelujah.
CMS should be doing, right? Like, if you can cure sickle cell disease, the downstream financial costs, but also there's the life benefits, but leave it to the side. The financial costs are going to be significantly saved. So you'll save a lot of money.
Yes.
So the federal government is the place that can sort of take the long-term view and run the kind of economic study to figure out how would we design a payment structure? What should it cost on the front end in order to make it positive all around?
Yep.
And they'll learn, I'm sure, a bunch of things, but curing sickle cell disease, I think there is a way to make the math all work out where everyone's better off. And then once they have it, presumably then they'll roll out some new payment process.
Yeah. And probably also, once they decide to do it at scale, engage in negotiation with the with the biotech industry,
because they'll know exactly what the benefit is, so then they know what they can pay.
Yeah, right now all this stuff costs millions of dollars because no one's doing it. It's not at scale at all, so it's just like a it's like a Birkin bag. You know what I mean? Like you can't. Almost nobody can get them. Yeah. And then another good policy story. This is the FDA, not the CMS, but Marty McCary basically has come out about hormone therapy specifically for women, saying that, we're leveraging data and basically stories from the 70s that have prevented women from being able to access hormone therapy. Obviously, men have not been avoiding hormone therapy. You know, it's like testosterone everywhere, but and women are avoiding menopause treatments and, maybe suffering increased risks of breast cancer and other things because we're behind on women's health. And so they're convening a panel to discuss this and figure out how they can change the paradigm here. Yeah.
And this has been in kind of the news cycle and podcasts and longevity circles for 10 years, 15 years. But the FDA is powerful. Like when they say okay, this is the new way we think about menopause, doctors and patients pay attention much more so than the Huberman Show or some podcast, which also is very well done, but doesn't bring the same gravitas that FDA does. So I think this is a great move. It's not bringing new science to bear, but it's definitely putting it on a much higher kind of visibility.
Yeah, I mean, it's just saying it's ridiculous to
we should give women the truth and let them and their doctor make decisions.
Exactly. All right, I think that's it for policy, but that was probably the most positive policy rundown we've had in a long time.
And even the elimination of the inpatient requirement, it's going to be difficult for health systems.
Yes.
But eventually it's the right thing to do. I mean, if we can deliver care in a more convenient, more cost-effective center, we should.
Yeah, I mean, it feels like it'll be fine for HCA and Tenet. You know what I mean?
Right.
But yes, I think, I mean, look, I'm excited about all the technology. Yeah. Sort of embrace going on across HHS. That's super positive. That is really, really positive. No, we have other issues, related to reconciliation budget and things like that. But, quite frankly, those things are below their, that's or above their pay grade. I mean, the stuff that's within their realm. This rollout was pretty strong. Obviously, hospitals are. I'm not quite sure how hospital administrators are supposed to reasonably navigate the array of challenges that are in front of them over the course of the next 24 months. It just seems like it's too much at one time. Yeah. Truthfully, it just feels like it's too much at one time. So
we have a conference story later that we'll sort of talk about where it really is difficult in the rural setting. But they have a lot of fixed buildings, fixed assets
that's the main problem.
They can't change. So you can't change those things.
No, that is the main problem. I mean, look, going site neutral was inevitable, But I just think when you combine it with
Right.
this like Medicaid
Yeah.
clawback, like those two things at the same time,
It's going to be really difficult.
feels really, really hard. Feels really, really
Yeah.
hard. All right,
Yeah.
moving on to payers. Pretty much a rough
Also really
week.
hard.
Yeah, rough week for the payers. Elevance Health CEO Gail Boudreau says the company is taking concrete steps to address cost measures. She
said that after, that's the headline. She said that after they missed earnings and
revised down.
guidance. Right.
Revised down. And I mean, ACA and Medicaid, right? I mean, these are both going to be really, really tough things, and the market is going to have to adjust the whole sector. It seems like the next story we're going to talk about covers it more broadly, but it feels like it's a sector downgrade. As we reprice in the effects of the reconciliation bill.
That's right. They are the entire payer sector, maybe with the exception of Cigna. I think the employer market is probably less exposed.
Yeah, for sure. For sure.
But all the government, which is, 2/3 of the business of the industry, is really under significant pressure, financial pressure.
Yeah. So this next story kind of covers the big Medicaid players, Centene, Elevance, and Molina. It leaves alone United because they have sort of their own challenges that they're dealing with. But overall, across this subsector, 10.7% down collectively since July 1st, as of closing.
Basically, since
Tuesday.
the bill was passed. Since July 1st, but and that's only 2 weeks.
And then this was crazy. I mean, Centene is like the leader in the space, right? And we covered last week how that 10% haircut is going to affect their roles, right? So they're down 10% because they're going to get a 10% haircut, right? I mean, that's about the right the right cut. Centene ripped up its financial guidance after it was blindsided. On Monday, S&P Global Ratings said it is considering downgrading the company's credit to junk status as a consequence. I mean, holy cow. Now it's a consequence of them ripping up their financial guidance as a consequence of the reconciliation bill, which
it's
is going to cut
sort of
their
interrelated.
Yeah, which is going to cut their base by 10%. So, again, these overnight.
It's hard to blame management that much for this, but at the same time, if they haven't done it yet, but if they get knocked down to junk status, it's really impairing, and they're not going to be able to raise money as easily or at all.
They'll raise it, but it will be
very expensive.
Terrible terms on the money they have to raise. So I mean, this is the dominoes keep falling. Yeah, the dominoes keep falling.
Right, and then they talk about the exchanges. So the exchange.
Oh yeah, the pricing, the premium.
Which I'm on an exchange here in Tennessee.
Not for long.
The price is going to rise. I don't know if this is Tennessee, but across several states, 17% for next year was the average that they expect.
Yeah.
So, and then
a bunch of people are going to get off of it.
Yeah. So
that's
then
too expensive.
One of the consultants advising the industry is saying that what'll happen is that the healthier, younger people will get off it and not be covered or find some other coverage. So the plans will then end up with, much harder risk pool, which then likely will cause them to raise prices for next year, and you get into a bad spiral.
Yeah. Geisinger lays off a meaningful percentage of their insurance division. So they eliminated 100 jobs. They said that represents 1% of Geisinger Health Plan employees, but it's 100 out of 1,100 of their insurance unit workers. So 1% of the total employee base, but just shy of 10%
of the insurance
insurance unit. So that's a pretty significant cut to that unit.
Yeah, and I mean all these plans are well run. Geisinger is maybe the original payvider model on the East Coast.
On the East Coast, yeah,
and it's difficult to sustain on the insurance side.
Yeah. All right, moving to health systems. Nonprofits, Christiana Care and Virtua Health explore a merger. So we have TK on our show very often. He's no longer with Virtua, I don't think, but we've spent a lot of time talking about Virtua Health on the show because of him. And looks like these two nonprofits are going to merge. They'll create a regional system that'll span 10 contiguous counties in New Jersey, Delaware, Pennsylvania, and Maryland.
I think this is has to be part of the playbook for every health system. So, you have a lot of fixed expenses. You're getting more financial pressure. You have to try to get more scale, and doing it with a neighbor where you have now a bigger geography. But you don't have to. You still can expand.
Right.
Maybe you can cut some costs. I think we're going to see a lot of this.
Yeah, I mean, you have to do it, right? And you talk about every hospital. I mean, these are $2-3 billion health systems.
Significant systems.
Right. So now they're going to be a $6 billion system.
Right.
They'll cut a bunch of, centralized overhead, et cetera, and that makes a lot of sense. But I think, not every health system is even north of $1 billion.
Yeah.
And so for them, the targets get a little bit hard, and that kind of, tallies into this Kaufman Hall Q2 M&A report that shows that transactions are down. And when you look sort of year over year, with the exception of a bump in 2023, it really has just been a story of just downward pressure in the M&A markets. I think that we're seeing mergers happen much more than we're seeing acquisitions happen, right? The buying 3 hospitals in this rural town, that's kind of over. There's been a lot of realignment. We've seen Ascension doing a bunch of selling off. CMS CHS has been selling off for years now. So there's a lot of realigning going on, and there's some transactions happening there. But most of the meaningful transactions are happening in the form of mergers, not really like buying hospitals off the market, right?
Yeah, and I think there's a density of population overlay, where Virtua and the other one just merged. There's a lot of people in that geography.
That's right.
If you're in a rural setting where there's not as much density, it's hard to be successful as a health system.
Yeah, for sure. Average seller size by annual revenue also down significantly. So that's another sign of sort of, what kind of transactions we're dealing with right now. Maybe not ideal transactions, and just sort of getting them off the books to strengthen your core asset base. So not a wonderful picture for hospital and health system M&A in the second quarter. Moving over to pharma, private equity firms Bain and Kohlberg make another big bet on biopharma industries. Wall Street Journal. Firms lead investment valuing PCI Pharma at $10 billion. See the company benefiting from broader trends. So this is a company that basically enables the commercialization and distribution of biopharma companies.
Yeah, so I think this is a bet that we're going to have some onshoring of pharmaceutical discovery and production, and there'll be more need on U.S. soil. This is located in like the New Jersey, Philadelphia kind of area where there's a lot of pharma already. And so as we bring things back into the United States, they're going to need more and more of this. Yeah, I think that makes sense.
Yep. Trump says 200% pharma tariffs are coming. Wall Street shrugs. A generous grace period would give drug makers time to sidestep most of the pain. Again, Wall Street Journal. And I think that the deal here is 200% sounds bad until you hear that they're not coming until 2027, 2028.
Right.
And then you don't really care about it anymore because that's a long time for the squirrel.
That's why Wall Street shrugs. They don't care. But I think that what it's going to do is move the really the tax game of running things through Ireland or other places like that. It's going to end that. Yeah. And a year to 2 years is I think was a negotiated settlement to give them enough time to move things
to reposition
back,
which
will be good for America. It'll increase,
and they've already been making the investments and things like that. So it's a signal, right? It's a signal of where it's going to go. I think the Trump administration didn't need or want to be very aggressive with pharma because A, pharma is the only sector inside of healthcare that's performing well in the market, and B, they were pretty aggressive and proactive in making those capital investments into onshoring, Lilly and Johnson and Johnson, early on. So I think,
they've demonstrated that they're moving in the direction the Trump administration wants.
That's right.
And so I think then they probably were more amenable to giving them time.
I think that's right. J&J raises full year outlook after beating profit expectations. We're just talking about how well they're doing. So sales in the second quarter rose to $23.74 billion, coming in ahead of the $22.85 billion that analysts expected. Rare for a healthcare company to, report a beat.
Yeah. I mean, it really is. There's a big difference now. The pharma companies have separated themselves from the payers and providers. They're just not the same risk reward profile anymore.
No.
Pharma's much better. Now I don't know that the biotech with the NIH funding being cut back, the biotech market has some questions. So like maybe their pipeline is in question, but the big distribution brands are doing well.
Well, see, but here's kind of the thing, right? I mean, I think on one hand, you're absolutely right about the NIH funding. On the other hand, I think about how the Trump administration is very big on right to try. I think about this cell and gene therapy pilot they're running.
Yeah.
I think about the FDA like if they make the path to commercialization much easier, private capital will come in.
Yeah.
You know what I mean? Private capital will come in and backfill some of that NIH development capital for sure. One of the big problems has been like the path to commercialization for these therapies has been very, very difficult.
Right. Yeah, and I think partially they're going to cut back on the spending, but also partially they're going to just reallocate where they're doing research into different areas.
Sure.
And J&J and Lilly and Novo, it might affect them in 10 years, but they have a lot of drugs now. And, if you're a healthcare investor running a hedge fund or a mutual fund or whatever, you want to be in these pharmaceutical names and not in the payers and providers.
And let me say something else. There's too many valuable assets sitting on shelves in universities collecting dust when their tech transfer departments could be licensing them and generating revenue for these institutions.
Yes.
Like, for real. Like, I think there is not right away, but I think there is a better business model for the viability of these research institutions down the road that is tied to the results of their high quality assets being commercialized. Like today, there's just not enough ROI coming out of those assets, in the market. It's not.
I would love, as you know, I've tried 3 different times to work on tech transfer stuff. It never has worked out.
No. So anyway, I just want to point out
there's a lot of assets.
There's a lot of assets there, and there should be better incentives for the universities to actually move those assets into commercialization, models. All right. So Health and Us, story from the New York Times. I found this to be a pretty interesting story. So glad that, we agreed to talk about it. It's a story about meth versus fentanyl, right? So, we talk a lot about opioids, talk a lot about fentanyl. Actually, deaths from fentanyl have been decreasing because there are, enough pharmaceutical interventions you can do to offset.
Yeah, Suboxone or one of those.
Yeah. There are things
help
you can do
with the withdrawal symptoms and help you with.
So I didn't realize this before reading this article, but meth does not have.
Meth doesn't have it.
Yeah,
so you have to go through that withdrawal suffering.
Yeah, which is really
hard.
Really hard, right? And so this article talks about how a model is sort of emerging that actually has been used in the VA for about 15 years now. They basically call it contingency management, but it's basically pay to perform. You know what I mean? Like if you stay off of meth for a week, you walk into this clinic, and they will pay you with some reward. So it's a reward-based system, and it's continual over the course of 3 to 6 months, which is, I guess, generally long enough for you to kick the addiction.
Yeah.
All in over the course of those, of those weeks through these programs, they're saying the cost is about $600.
Right. Yeah. The rewards are cash, but they're
small.
They're pretty manageable. I mean, it incents the person trying to get off meth, but it's $10, $20, $30,
Yeah.
and it escalates.
It escalates the longer you
over
stay.
time. Yeah. So like if you keep your streak going, you get more, but more maybe it tops out at $60 or something. The all-in cost is $600, and it's about a 50% success rate, which is
that's
incredible.
Crazy.
Incredible.
That's crazy, right? So half of the people remain stimulant free, for a drug that we don't have a pharmaceutical intervention for.
Right.
So it's like you got to find some type of behavioral approach.
Yeah.
And the really nice thing about using a cash-based model is you can track the ROI very easily.
Yeah.
It's like it's not even a labor cost. It's just like, here's the money.
Right. And it works. And as I forget if we'd mentioned it here or before, but the VA really has led the way in this, and it's pretty established. This is not a new thing. It's great that the New York Times is talking about it, and I wanted to talk about it because, as healthcare providers, we should know about this.
Yeah.
And but the VA has been doing it. Over 8,000 veterans have been treated with CM treatment since 2011.
It's awesome.
It's great. Yeah.
Yeah. This was one of the programs that the Biden administration increased specifically during the last year of his term. The question in this story, right, is does this align with the ideology of MAGA and MAHA, right? And that's the question that is going to have to be worked through.
I mean, I think it's difficult to be healthy if you're on methamphetamine. So getting people that have a drug problem off and into treatment, I think that should, whether it is going to be part of it or not is a political question, but I think it should be part of it.
Yeah. I mean, this would be one of those things to track. It would be very sad to see a program with this kind of success rate not be continued for political reasons.
Yeah.
Biden did it. We're not doing it, right? I mean, that would suck.
Yeah.
So one for us to pay attention to, but
Yeah.
great story. If you're interested in learning more, we got the link in the show notes. Okay, going to Web3. We got a couple stories this week. This is CNBC Crypto World. Headline is Crypto rises on renewed optimism. House will pass key stablecoin legislation this week. For anyone who has been tracking, Bitcoin has had a crusher of a week, hitting an all-time high north of $123,000. ETH performed incredibly well this week. And, we've been talking about Web3 ever since the Genius Act passed through the Senate, because we told y'all, like, this was going to be, this is the starter pistol for this being real.
The house is the easier side. I think.
Exactly. And, Bitcoin all-time highs are a good indication of that. But there will be implications for healthcare, y'all. Just stay tuned and track this and remember where you heard it. There will be implications for healthcare here.
Yeah. No, there's no question. It's not the first place that we'll see it. Financial markets, I think, will be the first place. But,
of course.
But healthcare needs
efficiency in their financial models, and
data
that's what stable coins can produce, right? On the other side of the coin, we covered Robinhood doing their tokenized stocks of OpenAI and SpaceX and other privatized companies. And of course, you release these tokens and they're not like pegged, right? They're not pegged. So they go on the market and you start having all sorts of arbitrage, and market players start to, play their digital games, and bots and things like that. And yes, these tokens start to deviate from the actual stock price, right? So I don't know why they did the digital tokens for like real stocks. I mean, I know why. It's because you can fractionalize them.
Well, you can. Oh, you don't know why Robinhood did?
Yeah, it would have just been much safer to just focus on the private companies, because like those are marked to market privately. Nobody, there's no scoreboard for you to track against.
Yeah, but there's not enough volume. You can't make money there.
Yeah, but
that's why I think
it was a big enough risk. I mean, you know, doing it on the true public markets and then having the price, you know, delta be north of 300% that's pretty problematic.
Yeah, then that's what the story is about. Like, they are offering these stocks, so you can buy Apple, you can buy Amazon. It's in Europe. It's not in the U.S. yet.
Yep.
And unaware consumers might go on Robinhood and think that it is the exact same as buying the actual stock, but it's not. It's trading separately. So it doesn't have to be the same price. In fact, often it won't be the same price.
Yep.
300% is unusually high.
Yes.
But yes, there are people gaming this for their own account and trying to push a price up and then dumping, and it's trading 24/7. So they can do things after hours based on some news that isn't actually going to move the market when it opens the next day, but it seems like maybe it will. I think this will get worked out over time, but it is a buyer beware thing. Yeah,
it's definitely going to get worked out over time. I don't think there's any question about that. This is what happens when you innovate.
Yeah.
You know, someone exploits and then you work through managing the exploits, right? So this will eventually work its way into a market structure policy that we'll be able to, you know, build on in America. But for now, I think just because we did talk about the Robinhood thing as a good thing, we need to sort of show some of the, I think that's some of the part bad of things.
The important thing for us to cover. Like, I'm naturally inclined to like the innovation, but we also need to point out the cautionary tales too.
And crypto's got plenty of cautionary, for sure. Okay, so moving into AI now. Two Trump stories back to back. The first one is, I think, a pretty big success for Pittsburgh. Trump has managed to galvanize a lot of investment and creating an AI hub in Pennsylvania. I think as we added it up when we were counting, it's like around $80 billion. Google's putting $25 billion in, Blackstone's putting $25 billion in, CoreWeave is putting $6 billion in, Amazon's putting $20 billion in. So it's pretty impressive, and Pittsburgh's an awesome region. And but you know, look, has been diminished as the core industry of steel, you know, was diminished, but a fantastic city, and this is pretty exciting.
Yeah, this is the first time. I mean, previous to this, it's been sort of the great areas of our country are getting more jobs, like adding jobs in Dallas or LA or San Francisco or New York is exciting, but Pittsburgh really needs you know, a shot in the arm since the, you know, we don't make as much steel as we used to make. We don't make all the manufacturing is not as much, and yet they have all the energy resources. They have Carnegie Mellon there. They have great resources specifically for AI.
Yep.
And to Trump's credit, I didn't even see that, and he's been able to, as you say, galvanize $80 billion to reinvigorate it. It's exciting. Well, hopefully it will turn into jobs, but it's great investment.
Yep, agreed. And then another really important story is that Jensen Huang met with Trump and has convinced him to allow NVIDIA to continue to sell their H20 chip to China. Probably didn't hurt that, you know, NVIDIA is the most valuable company in the world, $4 trillion, and makes up a significant percentage of the S&P 500. But also, you know, Jensen, I think, has convinced Trump that, look, the only way we stay ahead is by being open for business, right? You know, this space is getting incredibly competitive, and isolating China is only going to make them resourceful. We just talked about their lead in rare metals, and rare earth, right?
Yeah, and we have another story later.
They're just going to build an NVIDIA that's better. That's what's going to happen, right?
Yeah, I think it's even harder than that. If we limit their compute power, they have a lot of electricity.
Yes.
So they have already built a lot of nuclear capacity.
Yes.
They have more electricity than we have. So
Yes.
if we constrain their chip capacity, their compute power, they're going to have many, many less powerful chips. And I think what I've seen, at least, is that drives software innovation.
Yes.
It drives really smart people to figure out, okay, what can I do with 300 average chips as opposed to 2 Blackwell chips?
Yeah.
And they figure out things.
They're already ahead on that one.
Yeah. Yes. So I think you're right. It's the American way to have an open, free, let's compete head to head. And hopefully our citizens are innovative and smart and can outcompete China, limiting their access to chips. I mean, we're not giving them the Blackwell and like the really big chips. This is the H20.
H20, yeah.
I don't know. I was in favor of stopping selling, but now that I've seen the innovations coming out of China with the lack of chips, I don't think we're actually holding them back.
No, we're not holding them back at all. Yeah, that's right. We're going to close out the show talking about that a little bit. Let's keep moving. Billing platform Inbox Health launches AI assistant to answer patient questions. So this is just kind of a no-brainer implementation of AI into a very challenging aspect of the healthcare system, billing, answering patient questions in multiple languages, right? And just doing it way better than humans could ever do it.
Yes. The complexity. I mean, we're in the industry and I still have trouble understanding the EOB and the bills and reconciling it all. And it's almost perfect for AI because it's a huge volume of data that will naturally be consumed and ingested and then able to be explained as many times as you want to talk about it. And this is a great group to bring it because they want you to pay. And so explaining it and having AI walk you through it, I think it's a good use case.
Yeah. So just want to give a shout out to Inbox Health because, we're going to talk about much bigger AI players, but this is a good solution in our industry. All right. I think the big story of the week, from my view, is this one. Google is said to pay $2.4 billion for windsurf assets. They should have put assets in quotation marks because it's really the talent.
Yeah.
$2.4 billion. They didn't take the IP. They didn't take the technology. They didn't take the technology. They didn't take the majority of the employees. They took the co-founders. Yeah. And their top folks.
The top artificial intelligence, machine learning experts. Yeah. And that was it.
Crazy. And all of this, by the way, is simply to avoid antitrust.
Yeah.
So this is the new loophole, the new hack. Big tech is paying billions of dollars to snatch out the key man in these businesses, leaving not just the investors, but all the other team members. Yeah. With nothing.
The team members, the customers, the product, everything. Well, not nothing. But not the co-founders.
I mean, it's gross.
Not the brains.
It's gross. So I actually listened on Prof G Markets. Ed Elson interviewed the new CEO.
Oh, really?
Of Windsurf, because they had to scramble.
He's an internal guy, right?
Yeah. No, it's a harrowing story of how I think it's a week, but it might have been 72 hours where he had to find an acquirer. Yeah. So the company that made Devin, the AI agent.
Oh, right.
Has now bought Windsurf. But yeah, I mean, it's just insanity. Yeah. And this happened multiple times now.
Oh, yeah.
Scale AI with Meta. Microsoft did it.
It's the recipe now. I mean, it's
gross. It's so gross.
Yeah. It's going to be hard to stop, I think.
I don't know. I mean, I think... I think there's a real question about this. This feels like the kind of thing that A16Z needs to, get with Engine, and they need to start talking to lawmakers about this because it's just a way to get around antitrust, right? It's just a way to get around antitrust, and it's highly damaging to investors and early employees in these companies, right? Highly damaging. So I think there's,
I mean,
like policy needs to the regulators need to step in at this point.
it's better.
This is getting crazy.
It's better for everyone, I think, to let Alphabet buy all of
Buy the
Windsurf,
company. Yeah.
and maybe that causes some competitive issues, but it's the exact same as today, except
everybody
like
benefits.
you get this like zombie thing that is halfway Windsurf, but not the core talent, and you haven't really made the market better. And so I agree.
Yeah, I mean, the remains have to kind of like pick themselves up after they've been dumped,
right,
by the founding CEO, and like try to trudge on. You know what I mean? Like,
yeah.
like just think about the emotional wear and tear of that.
Yeah,
that's brutal, man.
Yeah,
and it was one thing when it happened one time. Microsoft bought Suleiman from that company. I was like, okay. I mean, it's Suleiman, so you kind of get that one. But then like the Scale AI one with Wang, and now this one, it's like, okay, this is, somebody needs to, like David Sachs, somebody who's close to Trump. You guys need to start talking about this. This is not good. Not good. All right. Meta acquires voice AI startup Play AI because they're small.
Yeah, right.
This is Meta's continued acquisition of talent. This is an acqui-hire for sure. But this is them doubling down on voice and not just ingesting and listening and responding with voice, but being able to synthetically create voices for many AI characters that they're looking to roll out.
Yeah, that's right. I mean, the voice interface where you talk to the AI character and it talks back is going to be the way that we interact.
That's where it's going. There's no question that's where it's going.
So it's just a question of how fast can we make it seamless and really good.
Right.
And yeah, Meta buying this is really smart.
Microsoft's Copilot Vision AI can now scan everything on your screens. This was rolled out to some Windows insiders, but this is Microsoft catching up with Gemini here.
Right. Yeah, Gemini had this previously, but I think it's good. I mean, it is, giving more context to the AI so it can help you in wherever you're looking at on your screen.
All right, final story, Vic. Moonshot AI's Kimi K2 outperforms GPT-4 in key benchmarks, and it's free. So it seems like DeepSeek, the sequel.
That's right.
In terms of an out of nowhere Chinese open source model that is blowing away all of the American frontier models.
Yeah, that's right. It is, I mean, just at the highest level, it is higher quality than, higher or equal to the latest one. So O3 or Claude 4, Gemini 2.5. But it is, if you use their servers, it's 1/5 the price. So 80% less expensive to hit their APIs. And if you want to host it yourself, you download it from GitHub and it's completely free. Now you have to have the technical capabilities to do that.
Right.
And they have, going back to the limitation on chips, that they have had to innovate on two different fronts differently than DeepSeek. So we haven't seen China combine their innovations yet. They created a 1 trillion parameter model, which is the most parameters I've ever seen.
Yeah.
But then they have, but if you get a big parameter model, it's very expensive to run and slow to run, or there's a combination of slow or expensive. And so they then innovated with this MOE. It's like a group of experts. So as you ask a prompt, say you're asking a software question, it pulls in 8 experts of 32 total and only uses, I think, 24 billion parameters tied to those experts. And so they have 1 trillion parameters, but they, like in real time, are only using the ones that are applicable to your question. So they get really good performance, and it's very cheap. And then so that was the first innovation. I haven't seen that. I mean, people talk about this sort of team of experts, but I haven't seen it delivered at any scale like that.
Right.
Grok has it, kind of, but Grok Heavy just gives the user, I think it's 7 full grok models integrated together, which is why it's $300 a month.
Right.
So like internally deciding like in real time, like which parameters are applicable to this question is a pretty interesting innovation. And then it's over my head, but they did a training innovation called the Munyon Clip, I guess. And it's a way to make the training process much more efficient. I guess there are training runs that run halfway and then it's a waste. You don't get any benefit from it. You have to rerun.
Crash out. You got to rerun.
Yeah.
It. Yeah.
And they solve the problem.
And I guess also some of the training runs like have the equivalent of maybe some corruption in the batch.
Yeah.
And so you have a suboptimal training run.
Right. Yeah. So there's a lot of money and time and effort put into trying to get the training run to run kind of smoothly.
Yeah.
And they solve that problem in a way that's way over my head, but in a way that lots of American experts are excited about and going to implement here. The nice thing is it's completely open source, open weights, open parameters, open code. It's all on GitHub. So, American companies and European companies and everyone will be using this. And I think it's healthy. It's going to push American companies, but that's probably good.
Yeah. So it feels like every 6 months we're going to get a Chinese surprise on the AI model front, just to sort of remind us that like all this money we're investing is, we're not in a vacuum.
Yeah.
And there will be alternatives. And it's like, okay, for national security, maybe like you can't run, Kimi K2 or DeepSeek inside of Palantir. But, like if you're running your own little startup and
I mean, we're running a venture firm. If we download their model to our servers and we use it for our purposes,
it's free, basically.
Doesn't matter where the code came from.
No.
And I think it's also really interesting that the communist country
is opening everything.
Is doing everything open source.
Yeah.
And America, the free market, is not. And I haven't fully processed that, but there's something with that.
Yeah. It's an analysis for another show.
Yeah, that's right.
For another show.
Right.
Good one. And I think we are back in the studio next Thursday, right?
Yeah.
You here?
Yeah, I'm here.
Okay, I think I'm here as well. All right, man. Thanks for putting this together. I'll see you next week.